Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It's February 8th. This is our chart lesson for the day, and this is going to wrap it up for the week. No chart lessons on Fridays as usual. Um, I did want to apologize today for my soapbox rant yesterday, um, but I felt like it was time to have that conversation again. We have to have that conversation every so often, so um, I just felt like it was probably time to have it again. But I hate that the majority of you have to listen to it for a few. So I'm not going to rehash any of it. We're going to do our chart lesson. But I do appreciate all the notes that I got and all the comments that were positive because I believe that 95%, maybe 98% of the people that come to the channel and participate um, do so with good intentions and want to learn something. And there's always one or two that have an agenda, and this is nothing new. So uh, it's probably some of the, if the truth knows, probably the same ones that we booted off the channel before. I think I've banned two people in the last 10 years or however long we've been doing this on YouTube, and uh, so I usually just let it slide and move on, maybe explain it, and if it starts to become a disruption, but yeah, I'm just going to start probably banning people if they, if you want to come and participate, that's great. And if you feel like you're not getting any value out of it, that's fine. But go find a channel where you do, or go find a trading forum where you think you do, and participate there. And we'll just leave it at that. So I'm not going to beat this horse again. So, but I just wanted to mention it again to say thanks for the notes and apologize that we have to have a conversation like that occasion, but it does happen. So unfortunately. But uh, another thing, I actually had jury duty today, and I thought I would get out pretty early, but didn't. I didn't have to be there till 9 o'clock, and then uh, even once I got there, I just sat around for about 3 hours, and they let us go and made us come back for lunch, and sat around for another hour, and they let me go, and so I'm done. So I don't have to go back, but I didn't get to trade today. So I'm doing all this after the fact today. I didn't get to watch the chart print most of the morning. So, um, which a lot of times I'm not sitting in front of the computer in the afternoons watching the charts. I'm usually here trading from 7. I usually try to be done by noon every day. Just kind of give you an idea of my trading day. I start around 7, and I try to be done by noon each day. So I'm usually watching the charts at least till noon, and I'll flip back and forth and look at them even if I'm sitting at my desk in the afternoons. But I don't always watch the chart all day long in the afternoon. So usually I'm here till about lunchtime, watching the chart consistently from when I sit down to when I'm done trading. And sometimes I'm done trading really early, and sometimes I trade to lunchtime. So it just depends on how the day's going. But anyway, it's just a little bit about how my day goes each day. But today I didn't trade, so just throwing that out there to let you know that this was all done after the fact. Uh, but it all still works the same. It's a little bit easier to find it after the fact at the end of the day, but I've got enough hints and tips about how to do this out there that if you've watched my videos for a while, you should know how. And if you don't, Google or use the YouTube search and search for how to do trend lines, and there's some on the website as well. Not all of them are free on the website. Some of them you have to be part of our membership, but there, everything we do is available on our website free. Um, there are quite a bit more lesson videos in the premium section, and you do have to pay to be part of that. So just to clarify that, I'm not putting a plug out. You know me, I do not plug. Um, that's not my style. I don't plug our stuff that we sell on our website or try to do, and I've never done that on YouTube. I never will. So just clarifying that for the people that the naysayers that like to complain. So um, because I guarantee you some will. But anyway, let's back out here. Actually, I meant to talk about that's the reason I was backed out. But you can see it was really a downtrend today. There's a two-tiered channel working down here. You got a break here, and there's two legs down to a new low. Of course, there's multiple swings in each leg, but there's your first leg. And then there's your second leg. And we way overshot that. But of course, the target, obviously, prices we're heading to, we're to the lower channel, trend channel line. You can see we bounced right off that again and went higher. And you can see we're creeping, we're testing both sides of that midline, and we creep down it right there before we broke through. And look how we came back and tested it. When we broke through this way, we came back and tested it before we went higher. When we came through this side, we came back and tested it. It's just like another support and resistance line, but it's not as reliable as your main trend line or your trend channel line on this side. That's why I make it a little lighter. It is not quite as reliable. It still works, it's still valid, but you got to be a little bit more careful taking trades off of it. So back out here where we can see it a little better, and we'll talk about the trades. The first trade I saw right around 7 o'clock was right here. Notice that you made a new low, and you could draw this trend line right here, right off these highs, and you drag it down. And you might have had it here originally. That's probably how I would have had it early in the morning. I might have even had it a little steeper. There's actually, you could probably argue for a little shorter term one, but since I came in after the fact, I'm looking at the bigger picture really. But you probably could argue for one here. It doesn't look like it's going to fit real well on the other side though. Maybe it does. Maybe it's just two-tiered here. So there's probably a shorter term one here. Yeah, there's a shorter term. You can see that one. But that's real early in the overnight, so you would get your break and you're going to try to go higher. But you really don't need that one. And that's another reason usually you won't see much drawn on this early stuff during the overnight. I'm looking for what's going to get me from the 7 o'clock hour when I sit down on, and that's going to be this channel. And that low would have already been there, and we're bouncing. And you can see there's a low. Then the first entry, we push on through the EMA. Well, actually, we'd already done that. Notice how we pushed right through, and then a failed second entry. Actually, the failed second entry short was right here, but it's right. You weren't back to the EMA, and it actually went lower, and it's ticking around up here. So I would think you're better off to kind of wait and see, but when it fails and goes short again, it gives you a little double bottom. I like entering there. You could have actually entered here just as well, but I didn't mark that one. I probably should at least mark it green, and both of them would have worked. And and you could have added on here too. If I was already in here, I don't know if I would add on here, but if I wasn't in here, I'd probably go ahead and enter right here, because generally when you get that failed second entry short and you get another attempt to go lower that fails, it's probably going to go higher. And at that point, I would probably be looking. There's your first leg, and just measure your legs and see what happens. You can see we didn't quite get a measure leg. We missed it by a few ticks. And then you came up short there, and somebody made a comment when I was reading through the comments, and they're exactly right, but you still got to be, I was talking about one like, say right here, it didn't get back to the EMA, so I was a little, or back to the trend line, so I was a little bit nervous about entering there. And this trader made the comment that tells him that the market's probably a little stronger, and that's true, but the problem is it could go up and fail, and so the key entry point is the trend line. So that's why we want it to come back to the trend line, because that's where all the magic happens. Doesn't mean that you can't take off early. Just like right here, we came up short, and if it continues down, that's telling you something. That's telling you the market's probably weak, so we're not going to get back up to the upper side. However, it could have bounced right here and went on up there and made a second leg up and got to that line and then turned down. So you got to be careful about that. So that's the reason. So I agree with what that trader said, but you won't know that till after the fact. So when it came up short here and starts trading down, that's telling you that, yeah, the market's probably weak if it keeps going down, but if it could bounce here and go on up, and So you don't really know that till after the fact. So hopefully that makes sense. So I did want to talk about that. You come back here, you just get a first entry, not a very good signal bar. Then of course it pushes up for that new high and it turns down. There's notice you got a first entry, pull back, second entry, it fails, and you still got plenty of room back to that. It's right off this little short-term trend line, so I like that one for just trying to get a scalp, and it might go even further. And then notice what happens. You get an overshoot here of this little one, and then you get a break. So you may try to get a new low. So you got to be careful. You need a really good setup in here to go long. You actually get a second entry here. And so you could have gone long here. Notice that new high, pull back first entry, pull back second entry. It's a fairly small bar. I didn't mark it because I was afraid we may get you may be looking at a measured leg here, and that's what you got to be careful of. And you can see we had basically a perfect measured leg, and then it bounces. So you just have to be real careful. But you could probably, if I was looking at this in real time, I probably would have said, hey, that may be worth taking, because you also got a little double bottom there. So I'll just leave it green and leave it at that. But when it turns up and doesn't go much any further than that, I like going short there. And I would be looking for another leg like this at a minimum. And this one actually ended up going much further. You can see we shot on down there. And then we bounced here. And there's your failed second entry short, bounces off that short-term trend line. That's your reversal. I like going long there. It doesn't turn out to be a reversal because you end up getting a close outside a new high, but it's still an easy scalp. And then it shoots down. And here you're better off to wait on your lower high, and you just don't get one till here, and it's right back into this support area here. That's a double bottom there. And so this is really a double test, but I don't like that signal bar, so I don't like marking that one as long. It's a second entry counting off that high too, but it's just a very neutral bar, and so it would have worked, but you don't know that ahead of time. So, and actually you probably would have originally drawn your trend line right here, but when you get this one, I would change it over to this one. And let me talk about this, because somebody asked me yesterday, you always start from the high of your bar, but I generally run it through the closes, and you'll generally get the best trend line that way. It's not 100%, but I'd say 95% of the time that's the way I'm going to draw it. And if you go back and look at my charts, you'll see that's the way I draw it. And so I drew it off the close there. You get and then guess what? It comes back. You get a third touch, confirms it. A little lower high, but look how neutral that bar is. You actually could have let it break below this bar and still entered there. I wouldn't have had a problem with that. But I wanted to clarify that. I'll make it green. You could argue for it to even be red. It's real close, because that's a really bearish bar, and it is a second entry counting off the low, and it's a double test of this trend line. It confirms it. There's your first two swings. This third one confirms it. So, and we just came off the high of what's looking like a range now, and so we're probably headed here. And guess what? That's where it heads down to. And at this point, I probably would have moved this lower like so, because now you're getting more touches right here and closes. And notice that you got a new high, first entry, pull back, second entry. You don't have much room there. I'd skip that one. Wait and see if you get the breakout pullback short. And look what happens here. This is a nice little setup. It comes back and tests it right there, but that's way too neutral. A lot of stem on both sides. Let me see if I can make that a little bigger again. But you can see how neutral that bar is. It closes right in the middle. But first entry, second entry, and you did make a new low, but that's still two legs back to the EMA, back to the trend line, the whole 9 yards. That's a second entry short. This bar is too bullish, But notice what happens. You get a little higher low right there. So even count from there, first entry, and even though it didn't tick higher, it's still a higher low. So that's a second entry short. So testing that trend line that many times, I like going short there. And you get just enough to get a scalp out of it, and then it bounces. And it was a double test this breakout area, and that's what you want to see, and it's off that key entry point. It's a little bit questionable being that close to the low, but in the bigger picture, there's a bigger trend line here, and we're probably going lower. And you can see we ended up going quite a bit lower, although we had a little fake out right there. So make sure you probably want to make sure you got enough room to get out there. What I would do is let it break lower here, and then I would drop me a limit order just enough back to where I got room to get out, or maybe back to one tick below the original bar. But if you did that, you probably wouldn't have got filled. So just keep that in mind. Then it bounces back again. You got a little trend line creeping up. That's your first break, and you need to wait on a better test of it, or break in a new high or a lower high or something. And this thing just takes off. It comes back here and tests the EMA and turns back down, but you got to go low right at or short right at the low. It actually went out the top and turned down and went out. And you know, if I'm sitting there watching that, I'm gonna be tempted to take that. But again, you've been really going sideways here, and you've already got a break and a new low in place, so it's a little bit risky. Again, you could probably argue for it to be green. But I'd probably wait on a better entry. You can see it's a nice move, but you don't know that ahead of time. So, and it comes down, get a first entry plus a break of that trend line, and then a second entry. And this thing went higher here. It broke above that green bar and turns and goes out. I wouldn't be afraid to have my stop already sitting under that, but I'd definitely put it under that one. And off it goes again. Usually when you get a two-legged move like that, a lot of times that is the center of the pattern. So if you just measured this one leg here, assuming that's the center of the pattern, then look where that puts you. Back down in here, and that's about where we got to before we bounced, and that's probably why it bounced right there without going all the way down. That's, you know, if you start looking at this stuff, it'll start to make more sense a lot of times. So I like that second entry short with that big bearish bar, and you get a lower high here, too bullish though, and then you get your true reversal pattern and big bearish bar. That's a really big bar. I'd probably let it break lower and drop a limit order back up in here. That's another thing too. I'll talk about that real quick before we move on. I've got a lot of questions, and we talked about this I think yesterday or the day before. The bars are really big, and so it's going to be almost impossible a lot of the times to enter and follow the 2-point rule. So what you have to do, but you still have to put your stop in the right place. So if you enter here, your stop needs to go above that swing. If you enter here, your stop needs to go above that swing. So don't enter and put a 2-point stop back that falls in the middle of this bar, because you will get stopped out on good trades most of the time. There's a reason we put the stop where we do. So don't do that. Don't do it that way, or you're probably going to regret it. Either put your stop, either skip the trade if you don't feel comfortable not following the 2-point rule, or understand that in a really volatile market that you're probably going to have to use a bigger stop, and you probably want to make your target a little bigger. And when it's really volatile, you probably won't have any problem. If you're reading the chart right, you're probably not going to have any problem reaching a bigger scalp, and a lot of times really quickly reaching another scalp, because the market moves really fast and really furious. So if you've got to use let's just say you got to enter here and you want a 2-point stop, then it takes a 2-point stop to get up here. Then go for 2 points, or for your target. Or I'm sorry, say it takes a 3-point, then go for 2 or 3 points on your target. And that's the best way you can handle that. Either that or sit on the sidelines. We're right here at 10:14. Let me back up here a minute. If you go back to some of these volatile days that we were having, where it's just all over the place and crazy, and the bars are huge, you know, the average trader just may want to sit this out. I mean, this stuff. As long as you follow the rules, you're probably not going to get hurt, but you still may have a lot of losing trades, and you may not be able to read it quick enough, and definitely don't enter any of this stuff and hold it overnight. Don't dare do that. But on day trading, there's a reason they lower the margin, because as long as you're using a safety stop, you're going to be okay, and as long as the market's open, they're going to kick you out when you start to run out of your margin anyway. So you don't have the danger. You still have a danger of wiping out your account, but you don't have the danger as much as you would as far as losing more money than you've got in your account. Neither one of those is a good thing, though. So if you're not a really experienced trader, you're better off to sit on the sidelines. So I felt like we needed to say that. I believe I've already said that, but just to clarify, make sure you're always trading with a stop, and make sure that you're following the rules, so you're either only losing 2 points, or you're only using what it takes to put your stop one tick above the swing high or the swing low where we recommend you put it. So and if you're doing that, you're not going to get hurt too bad. But at the same time, I'm not saying, hey, don't worry about it, go trade, because you should be worried about trading markets like this. Especially if you've only been trading for the last year or so, and you're only used to the really slow, methodical ES, because this is not the same market right now. Even today, even though it's much more manageable and easier to read today, there's still a lot of big bars and things. But here's a nice trade. This bar is, just to give you an example, this bar is exactly 8 ticks. So even though it looks small, it's still a 2 point. So you probably got to fudge it by a tick or so to enter this one. But that's an easy second entry trade with first break of a trend line. That's an easy trade. You didn't get a whole lot, but you got an easy scalp out of it. So, and you actually could have got, if you entered one tick below that, your entry would have been 42.75, and this thing went all the way down to 38.50. So there's 4 points in there. So you could get 2 or 3 points out of that trade easy. So, and you really only had to add an extra tick probably to make that one work. So that's a good example of what you might do. Or you might try to enter this one with a limit order and put it a tick back, and maybe you get filled. It doesn't look like you probably would get filled on that one, so you probably missed the trade. So but that's another way to try to enter. And hey, so what if you miss the trade? At least you would have entered following the rules. And you'll have to tell yourself and understand that, hey, I may miss some doing that, but at least I'll still follow the rules and I'll get a few trades, because there's trades everywhere. And that's another thing I want to say today, is that I haven't marked all the trades. There's other trades here that you could probably take. But when the market's really volatile and crazy like this, you want to stick really tight and take the best trades. And that's the reason I didn't mark some of those that were green and so forth, because it's just really volatile. So, but anyway, let's move on here. That would have been a nice, easy trade. And there's 2 legs up. And again, this is like a repeat pattern right here. I didn't mark this one because this is really your signal bar that didn't break higher here, but this is a repeat pattern. And if you recognize that, just go short below that bar. That's a big bar though. That's the reason I didn't really mark it. But see if you can study this pattern and look over here. It's the same thing. You're getting your correction, a break, a big move to a new high. You're getting your correction, a break, or you're getting your correction off this down move, your break, move to a new high, and down it goes. And look at that big bearish bar. Look at that one. This one was a great setup. This one is not. It's still a pretty good setup, but being this volatile, you want it to be perfect. So, and then We bounce here, head back to, notice how the midline's holding. I don't think you want to be looking for any longs here at this point, just shorts. Uh, there's your trend line up. This is your first close outside, so you really need something. You want to wait on your lower high. Look how it pushes through the EMA, pulls back. But notice that new low there. First entry short, second entry short. Look at that bearish bar. It's a little bit sideways. It failed out the top. That's a great setup. And if you catch that one trade, you can ride this all the way down. And again, that's a big bar, so understand. But look how this one did. This one went lower and backed up. So you might have been able to get in this bar 3 or 4 or 5 ticks back. It's actually a total of, oops. That's that's almost four points. So it's a big bar. But they're all going to be that way. So you might have got a point back in it and got a 3 point, and then you could have gone for 3 points and you would have got that plus some. Just gone for 3 points on your scalp and maybe try to hold a runner, and you would have easily, I mean, this was an easy one. It's just riding down that trend line until he gets a little overshoot, and that's probably where I would have exited on the over. You get an overshoot right there and it bounces up, that's probably a good place to exit, because you're probably going to get a break pretty quickly. And look what happens, you go a little sideways and you get a break, and if you'd have exited right there on that break above that, you would have got out within, 2 points of the low, and that's, I mean, that's as good as it gets. But just kind of go sideways here. You probably want to stay out of that. There's a failed breakout and a nice bearish bar. I made it green because it's a first, it's actually a second entry counting off this. This is really a double bottom, so first entry, second entry. But you got that little trend line is creeping up, and that's the first break. So you are a long way away from the EMA. It is a failed break out of a little trading range. It is a second entry short. There's a lot of reasons to like that trade, so I marked it green. And if you catch that one, that one's actually, that one's 3 points. So in the big scheme, that's not too bad. And it may have broke lower and backed up some, so you might have whittled some of that off there. But that would have been a one you could use a 3 point stop and go for 3 or 4 points or whatever, and it's easy to get, and you would have got it pretty quick. So and this thing runs on down. There's a lower high here, but very neutral bar, kind of 4 bars stacked up. You don't want to enter there, and of course you don't want to enter way down here. It breaks higher, and this is really a failed second entry long after 2 measured legs almost. So that's probably going to run for a scalp at a minimum, and your measured moves down here. So you know, that one's probably one that when it broke higher and turned and went out the other side, I might consider, as long as there's room to get out before you get to the line, and there is. So again, I was just trying to mark the ones that were, that weren't green, that were really solid. I'll give it a green since we've talked about it. Okay, I'm sorry. Somebody's just had to get a hold of him. They texted me about 4 times, and then they called when I didn't answer the text. So you gotta love your mothers. I'm happy mine's still here with me, so I can't complain. But anyway, back to the trading. And so we come off the low here. You got to be really careful about going long. So I only marked one long here, and I'm not crazy about it. I'll explain it to you. So, but I'm really not crazy about it. But I did mark this one. When we came off this low, you got to figure we're going to the high, and we didn't get there here. And so notice there's a trend line working down. You get a close outside. You tried to go lower once. You try to go lower twice, and it actually broke lower. So there's a failed second entry short there, and it does confirm that trend line working up there. And when you drag this up, it does fit up here. And so you might have risked that one. Again, I'm not crazy about it in this market going long when it's been downhill all day. So, but there it is. You might consider that one. It's also a second entry long, pull back first entry, and then pull back second entry. So there's several reasons to like it. I marked it. Um, I don't think I'd probably take it if I was trading live, but it's there. And of course you move up and then look what happens. You get an overshoot here and you get a first entry long, pull back second entry long, and notice that little trend line. It actually breaks through it, but that's a failed. You can treat that like a failed second entry long, and it is a big bearish bar. So I like going short there, looking for it to at least come back to here, and maybe what you got to understand. Let me back out where you can see the big picture. That's the first break of this huge channel. So on a trend that strong, you're going to retest that low. So at some point you're going lower. So you're still kind of in the short mood here, or the short, you're thinking short still. So when you get this failed second entry long and a big bearish bar, of course it's another huge bar, but they're all going to be that way. So we're just talking about the trades. I'm sure I'll get some questions. Well, that's a huge bar. It doesn't fit the rules, even though we've already talked about it. But just understand it's going to be that way if you're going to take the trades. We're still showing you the same trades, just they're there. They work at the very same as always. The bars are just bigger. So there's a failed second entry long. Go short there. It's a quick, easy move. Back down to the trend line. It bounces. And being right here at this main trend line in here, just sit tight. There is a failed second entry short right there, so you might have thought about going long there because you did have a break, new low, and it bounces right off the trend line again. So you might have considered going long over here. I'll mark it green, but I think I'd just sit tight. And look what happens. It runs back up and it touches these highs again. I ended up drawing the line there because it's kind of working both sides there, and it pushes through, turns down, pulls back and tests it, and gives you a nice bearish bar on a lower high there. It does break higher than this real bullish bar, so I like that one. And if it heads lower, consider a measured move. That's your two-legged move, so a lot of times that's the center of the pattern, so you're looking for a measured move down here. And guess what? We just kind of go sideways there for a while. And you got to be real careful here. It's pretty obvious we're going sideways by the time you get a setup. But finally, get a little break higher here and a lower high and a fairly bearish bar, and you still got room to get out before here. So I don't have a problem with that one. It actually takes off, and it would have been, seems like everything that takes off in the afternoon just rockets. And then we bounce back into the trading range here. And it takes you into the 2 o'clock hour. So it was a lot of stuff going on today. And again, you could argue for more trades in there. But if you just sit patient, you ought to be able to pick out 1 or 2 really easy ones here that you should be able to get a nice trade. And like I said, if you hadn't been trading very long, you probably don't want to really trade this live. Just get on the sim and practice. But the main key to understand is, even though it's volatile, the bars are all bigger, the price action, everything still works exactly the same. The setups are still there. They still look the same. The bars are just bigger, and it moves a lot faster, and it moves a lot farther. So that's the difference. That's a big difference because it's, it could cost you monetarily, but it can make you more money at the same time. So just keep all that in mind. And we're 35 minutes into this. We've gotten where we didn't take 5 minutes to do most chart lessons. So it's kind of odd getting these long 30-minute chart lessons again. So, but I wanted to do a good solid chart lesson today since this whole week's been kind of odd. But hope you had a good trading day. I hope you had a good week. Hope you've enjoyed watching this crazy market. I don't think it's done yet. It seems to be slowing down a little, or not quite as erratic anyway. At least it wasn't today. So who knows what next week will bring. But hope you have a good good weekend, and we'll be back again to do this all over again Monday. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.